Welcome everyone to Chart Fanatics, the go-to channel for the most in-depth strategy and concept breakdowns from the very best verified traders in the world. And to kick this off, there is none other than the very best trader in the prop firm space, and I would say, generally speaking too. I don't know if you'll take that, but I'll throw it in there anyway. But he has the record for the largest payout in prop firm history with a total in payouts of over $2.3 million. And not only that, just to top it off, if that wasn't good enough, in December, he took $130,000 to over $1.4 million in roughly about a month. Absolutely incredible. And you probably already know who it is. It is the founder of The Lab, Trader Kane.
Appreciate you, mate. Well, another amazing intro.
I try.
Yeah. It's you really went all out there. So.
Well, we're very excited, Kane, because this is a new concept that we're very proud of, and I know that we're gonna really provide so much value to the trading audience and the community generally. We're gonna go into your strategy that basically you're using to achieve those payouts, achieve the results.
Yeah.
And where should we begin?
I have a relatively basic strategy. I think from a high level perspective, I always want to see price rebalance into 50% of the range and then continue with the trend, right? And I built a model around that. The main thing that I consistently talk about is the daily and the hourly and H4PO3. And it's just, I think we should really dig into that today because I think that's where a lot of people go wrong. They really marry daily bias of, I want to see price trade here, but actually I'm more of I want to see price trade from here to here. If price doesn't get to where I want it to go, then I don't engage and I'll just trade the other way in the coming days, weeks, months. Yeah, I think we should really go over that. So
let's go straight into it then.
Yeah, so I think every single day when I approach the chart, I am looking for price to, I guess, manipulate, right? So if let's just say the daily open is here and I want to see price trade higher to trade lower, I have two options, right? I can either wait for price to trade lower with my draw being higher and then look for various different things, right? A change state of delivery, an inversion. I'm saying all of these words that everybody is familiar with, right? But typically what I look for is I look for this and then a much higher range. And then there is around 50%. Obviously, this is wildly inaccurate because 50% would be here, but it doesn't look as great. What I'm looking for is I'm looking for price to trade into around 50% and then trade into 50% of this range because I don't need a big move. I just need to grab that base hit every single day, and then I'm done. I move on. And if I take a couple of stabs at this, and if I'm wrong, I'm wrong. That's okay. I'm wrong sometimes, and that's fine. But I really try to instill into everybody that all I need to do is wait for price to trade into, and we'll draw it out, right? Is let's just say more recently, we'll use recent price action. Price is tumbling, yeah. All I want to see is price trade into 50% of the range here, and then 50% of this range. Yeah. And all I want is this move right here. Because at that point, even though this is the trend, if this is going to continue to here, great. If it's not, it's most likely going to reverse from here. Yeah. So all I need is this move right here. I don't need to trade from here to here because this is a risky move. And I don't need to try and grab this because this is fighting the overall downtrend that we're currently in. Yeah. So I only need to do that. So how do I do that, right? And what do I look for? Because obviously it's all well and good just saying I'm looking for 50% of the range.
And you're only trading NASDAQ, right?
Yeah, I'm only trading NASDAQ. Obviously, I look at the SP 100 ES for divergence, but we'll get into that, right? We can take the price action of recent as a good example, right? Let's just say the daily chart looks like this, right? And then this one looks like this. And then this is the daily open that we're currently in, right? All I want to see is price either trade, and this is obviously just a daily chart, is I want to see price trade into this high, which roughly is around 50% of the range, right? So all I'm looking for is I'm either looking for price to trade below this low and I can look to trade some sort of reversal. That is a much more risky trade because it's fighting the overall trend.
Yeah.
Or I wait for price to manipulate at a significant time point, and then I'm trading from here
The
to
50%.
here.
Yeah.
Yeah? It's just this tiny little move that I want. Why would I look at it like, we can just rub this out.
Yeah. So this is the daily time frame, right?
Yeah, this is the daily time frame. Sorry, you do the text. Okay, so when I approach the chart, I would always look at the daily candle forming with a wick above this area.
Okay.
Right? If this is going to continue, typically we continue from previous day highs, et cetera, right? So I would always anticipate that this daily candle is going to form, not like that, is going to form like this, and it may end up looking like that.
Mm-hmm.
It may go all the way off the table, right?
Are you identifying fair value gap, or is that not really? Is that just an added confluence, and you're more focused on the?
Yeah, I mean, this would
taken?
definitely, like, if there's an imbalance there in price, i.e., the delivery is so one-sided, then yeah, I want to see the delivery rebalance.
The main focus is
100%. It's the daily high, right? I don't care if this wick comes all the way down here and there's no high here. I would still frame this as my version of manipulation, right? We manipulate above the previous day high. Everybody that got short inside of this move here, and forgive me, I do speak quite bearish terms quite a lot recently because I have been quite bearish on the market, so it's hard to just suddenly speak more bullish. So everybody that got short in this candle from previous day that's swing trading, et cetera, when we get a daily close here, the one thing they don't want to see is us trade into this high.
Yeah.
So the amount of orders that are being stopped at this point,
So these would be your stop losses here.
yeah, they would be my stop losses. Yeah. That I'm anticipating that are getting run.
Yeah.
Obviously, there are some days that this just never happens, right? And this wick looks like this, and we trade like that, and that's fine. There are obviously other confluences that I look for in this area, but this is just, like you say, the daily time frame right now, right?
Yeah.
I combine the daily time frame with the H4, and then from a very micro time frame, it's the H1 for where I want to see all of those time frames align. And once they align, we then obviously look for entries, right?
Yes.
And at that point, so I'm anticipating daily PO3, H4 PO3, H1 PO3, and then once these are triggered, I'm looking at this.
PO3 would be
power of 3.
Yeah.
So accumulation.
So accumulation, manipulation, distribution.
And so let's just take this and simplify this for a lot of people, right? Because some people, there's multiple different ways that it's done. Where's the black pen?
Hey guys, just a very, very quick one. If you're enjoying this playbook and you want to get it sent directly to you, make sure to go on chartfanatics.com, put your email in, and every episode we drop, we will send you a direct PDF breaking down this exact playbook. Or alternatively, also, the playbooks will be put all together with the rules over on Tradezella. That is an incredible collaboration. So if you want to actually add the playbook to your Tradezella, make sure you go check that out as well. But let's get back into this episode.
Okay, so some people support resistance traders, some people are range traders, et cetera, et cetera. So when we get price typically trade within a range like this is just a low, this is just a high.
Yeah.
Typically, I really subscribe to market maker theory, right? So at this point is where 90% of people get trapped, and they're like, this is a retest of the trend of the range, and we take a long, right? That's that break and retest. I'm not a breakout trader, so I would never ever look for that. I would actually frame this as some sort of manipulation back inside of the existing accumulation.
Yeah.
To then, where's the green pen? You got it?
There you go.
And then I would look for this to be distribution to there.
Yeah.
So if we then visualize that as your accumulation, this is distribution. We've got all the pens.
That's it.
And this is manipulation, right? How can I frame my daily candle within this perspective?
Yeah.
I'm looking for the manipulation to trade into an existing high. So if we use the blue, this is the opening price. So this is the daily candle. at this point, this daily candle looks like this.
Yeah.
Yeah. And I want to trade the wick of this candle.
Yeah.
And then we fractalize this, right? And fractalizing just means applying the logic to a different time frame.
Yeah.
Is we then look for this on a H4. Yeah. So around those, speaking EST times here, around 6, 10.
Yeah.
Typically 10 is where I'm looking for. I'm looking for 10 a.m. to manipulate higher and then trade lower.
So that's where, if you're looking at the H4, that's where you'll notice some candles next to each other. That's the range.
Yeah.
And that, as you say, that 10 a.m. one, you want that wick above, taking out those prior wicks. That would be your
taking out those prior highs, those prior lows. Yeah. That's my manipulation. So everybody will always tell me 10 a.m. reversal doesn't work. Fine. Then don't trade it. But it's typically the time frame that I like to trade the most. So that's where I'm most active in the chart, around 9:15 to around 11:30 EST, because it has that 9:30 liquidity injection, so it's most volatile. You can grab a quick move. And then at 10 a.m., it's most likely going to manipulate above the previous 9-hour high.
Yeah.
Trade back into around the 10 a.m. open, statistically reverse. I believe it does. Some people don't believe it doesn't. But ultimately, by this logic, if I'm trading here, and this is the premium discount that I want, I actually only care for this move.
Yeah.
I don't care about this, right? I actually don't care if we distribute. I just want to trade the manipulation back into the range. Because if it is going to continue, I don't want to be caught in it. And if I'm expecting bearish price, I will just, as soon as we sweep into this, I would just trail my stop to just under break even, so that I'm not losing any money due to fees, etc., etc. So we fractalize that onto a H4. We add in the H1. And when all of the timeframes do something like this and they manipulate, as soon as we get that sweep, so say this is, say this is 9 a.m. Sorry, not p.m. This is 9 a.m. and this is where 10 a.m. opens. Yeah, I want to see 10 a.m. open, sweep above the high, and once this candle flips bearish, I don't want to see it continue and suddenly become bullish again. So at that point, this would be my logical area to get break even or whatever. And I would look for some sort of reversal in and around this area. And again, we can get into that in a minute around actually the entry model. Yeah. But that
we have charts as well to go over.
Yeah. We have a bunch. Yeah. So and that is typically what I look for on a daily. Once that daily profile where I want to see price trade into is hit, I will then do the exact same thing on the H4. And typically when the H4 and the H1 aligns around that 9, 10 a.m., they will typically both hit the same point that I want it to go to. And then I'll wait for that breakdown. Obviously, I'm not just like, oh, we traded above the high, I'm short, or or we trade below the low and I'm long.
It's like confirmation and stacking those layers then creates your high probable scenario.
Correct, yeah. And that's what I'm always waiting for. The reality of this is I guess the pros of it are, when it plays out, typically this move can be quite quick, especially to the downside and the upside. Once it really hits that level that we want to see. Because if we were looking
at the upside, it would just be the exact same, just flipped.
Yeah, we just turn the chart around. Yeah.
Turn this.
Literally, we would just flip it the other way. Yeah. And it would just be going up. Like I said, as of recent times, we have been gone down quite a lot. I'm staying with the trend. Like I said, I want to see price redeliver into that equilibrium, that 50% of the range, the premium discount, you name it, whatever it is. And then once we hit that, I want to see it continue with the trend, wait for that confirmation. The pros of that are you can really catch like the highs and lows of the day.
Yes.
And you can grab that move and it can be very quick and you're in and out. The cons of it are you are trading a reversal. It's risky, right? You are trading against current order flow. You are waiting for confirmations. But ultimately, this is a riskier model, which is why, for those that know me, I am very, very fond of break-even trades. Like I love, as soon as I'm in this trade here, let's just say I'm risking $1,000, right? The moment that I can claw this back is a win for me. Yeah. Because in my head, I just lost 1K. And if I can get break even here and I'm suddenly break even, I no longer am down 1K in my head. And then if suddenly I'm up 1K or I'm up 2K or I'm up 3K, it's a win. At that point, at this point, I'm now in my head, I'm up 1K, I'm actually up 2K because I risked 1K, And that for me is the real differentiator between a lot of people. A lot of people only see the reward and don't focus on the risk. I really emphasize the risk and get break even when I'm like, either my intuition's like, this doesn't look good, because that is also a real thing. But also the model is like, okay, hourly low, 15-minute low. We're now reclaiming, okay, I don't want to see that trade back into the open. I don't want to see that higher time frame candle flip bullish after that candle flips bearish and we take out the high. Because statistically, if it does, I'm wrong, right? And that's just
technically that this process of the PO3 or the AMD is then almost cancelled out in a sense because the manipulation didn't manipulate.
Yeah, most likely you can then obviously look back, and this is just how it works, is like most likely this is some sort of manipulation, you know, like on a lower time frame. I don't really look for time frames lower than this for the AMD.
Yeah.
I always just want to see, you know, from a daily time frame, this is the wick. From a H4 time frame, this is the wick, and then an hourly time frame, this is the wick. I use that to like section off this area as me wanting to get short in. So like I wait for that daily level to hit, great. I then wait for the H4 level to hit, and I wait for the hourly level to hit. And this is the area that I want to get short.
In this case, if you get to the 50% of the range, that's your original target.
Yep.
What is it that you look for, if ever, in terms of holding longer? Is there anything in particular, or is it more so just momentum on the day? Is there anything that sort of stands out to you?
It depends, really. I really adopted this as like a take my trade, get out of the market, be done for the day. And I really do adopt that mindset. I think the reality is once you start to trade bigger size, you realize that like leaving this move to here is 20K, but this move to here is 100K. You do start to kick yourself a little bit because we're humans and we have emotions, and it's like, wow, I could take 5 of these trades, or I could have just held this one. Statistically, I've also like held trades out to lows of day and then got front run, and I'm like round tripping my trade.
Yeah.
So like over time, I've just realized that statistically, if we're going to return, it's 50%. If we blast through it, then I'll put my stop loss at 50%. That was what I was going to take for the day. And if it runs into this extreme, great, you know. But you can't play for those 2%, those minus 2% or plus 2% days, because okay, it's great that we've had a week and a half of back-to-back -1, -2% days, but it's very, very irregular. We typically have plus 0.7 days or a minus 0.3% day. It's like if you play for those extremes every single day, you are going to get chopped up. If you play for the range every day, you're going to get your base hit most of the time. Maybe not every day, every other day, maybe 3 days out of 5, maybe 4 days out of 5. But technically, this is the area that price trades the reverses from the most. But that does, like I said, doesn't mean that I don't sometimes stay in for here and trail this aggressively when we have those, monstrous drops, because someone speaks about tariffs, or suddenly China decide to return tariffs and we drop 1% on NQ. It's like, okay, well, this is going to continue. It should just fall through here. I can just trail my stop loss to here, and if it comes back, I'm wrong. And sometimes that stops me out and then dies. Sometimes it stops me out and then rallies. I don't get to control that. So all I can control is, okay, I've made this much money. I'm locking that in. Whatever happens, happens. If we continue, we continue. I'll just consistently look to trail that. Or I'm happy with that, and I'll come look at this at 4 o'clock when the market's about to close, and I'll see where we are. I'm a big believer and advocate of everybody wants to be a trader to work less. Yes, sits at their charts for 13 hours a day, and it's like,
and they're working more.
Yeah, actually, you're working more, losing more, and it's just mentally exhausting. So that's kind of what I look for. Like I said, there are pros and cons to it. The cons are that it is a risky setup, and it requires a lot of patience. And that is probably the number one thing that 95% of people really, really lack in this market. They open the chart as soon as they wake up.
That's right. I had the pros and cons for the people.
Yep.
100%. Like, I think not only the patience, but because it's shorter term trading, a lot of people assume that you don't need the patience, right? Because that's for swing traders. That's for the position traders.
Oh, I wrote this the wrong way.
It still requires patience to let, as you say, the model to play out and present itself first. Let's take a break for a minute there, guys, because I want to tell you about our preferred prop firm, Apex Trader Funding. Now, Apex is no stranger to the podcast or even chart fanatics, because we've done 2 incredible episodes with 2 record holders in terms of Trader Kane, who got a record payout at $2.3 million at Apex. And then beating that record in the end was JadeCap, aka Kyle, who also then has a record payout now of over $2.5 million in a single payout with Apex. And that really just shows the infinite possibilities you can achieve at Apex Trader Funding. Now, what traders love about Apex is that you can get up to 20 accounts. So whether you get the 25K account ranging all the way up to the 300K account, you can get 20 of those. So if it's 20 300K accounts, that is 6 million in tradable capital, which is absolutely incredible. Not only that, it's only a one-phase evaluation, there's no daily drawdown, and up to $25,000 per account is 100% yours. And after that, it's a 90% split in your favor. That's right. At Apex, you can actually trade with Wealth Charts, Tradeovate, and Ninja Trader, so you can choose your favorite trading platform. And not only that, you will actually get real-time data included when purchasing your evaluation with Apex. What I personally love about Apex is that as long as you're trading your day-to-day strategy, you don't have to worry about trading the news. You can actually request your payouts every 8 days, and there's actually no cap to your max payout, which really shows the infinite possibilities you can have at Apex. Thanks to Chart Fanatics, you can get the best offer available at Apex. They are always running sales. So make sure to use the code CF that will automatically give you the best offer available at Apex. The link for Apex Trader Funding is in the description below. So click that link, use the code CF, and you will get the best offer available. Become an Apex trader today. Now let's get back to the episode.
It's a riskier trade because it's a reversal, and price typically, as we can, open the NQ chart, you can see when it runs, it runs.
Mm-hmm.
We're up nearly 50% from COVID lows, probably more actually. When it runs, it runs. And typically, if you try and catch a reversal on a very bullish asset, historically, it's dumb.
Mm-hmm.
Many would argue at least. It's risky. It requires a lot of patience.
So would you say most of your trades, even though NQ has been quite bullish over the last year, you're still looking at sells?
Yeah, because ultimately, if price is going to continue higher, it re-delivers into...
Because that's where that 50% thing comes
100%.
Because even if it's going to go long, you're just getting that base hit.
Yeah, and some days, like prices, really overextended for like a week, and I will wait for it to come down to that around that 50%, and then I'll trade the reversal back into the 50% of the drop.
Okay.
I'm basically trading 50% of the 50%. I'm waiting for the higher time frame pullback.
So that fractal nature.
Yeah. So it requires a lot of patience. It's risky, and if managed correctly, you will have a lot of break-even trades.
Okay.
And that is to combat this.
Yes.
Yeah.
Yes. Yeah.
That's the only reason. And people look at this as a negative thing, which is why I'm putting it in the cons.
Well, I think it's important because a lot of people would struggle with that. And if they're not, or at least if they're not mindful of it, they may not be as aggressive with their break even as they should be. So then they end up taking unnecessary loss after loss. And in reality, if you manage aggressively as you're meant to, then that allows obviously for the pros to take place afterwards.
Yeah, like I really, about 4 months ago, I heard Pax, a guy that traded the pits, obviously, he said you either need to be right or right out. And I thought about it and was like, that doesn't really make much sense at the time. And I was like, well, actually, he's right. Like if you're wrong, you need to be out of that trade as fast as you can. You don't want to be in it or waiting or being emotional about, but I have a gut feel. The market doesn't care about your gut feel. It doesn't care what you think. And you can do that over time. So I put this in the cons, but I would put a green bracket around this because I actually think that this is most of the...
Well, this is what makes it profitable, is by doing it aggressively, but it's just, as you say, it's in the cons because you need to be mindful of it. You have to know that that's something you have to accept.
Yeah.
And for some people, it might be hard to accept, but that is so important.
People that don't do this correctly, that pick up my model, will consistently tell me the model is not profitable.
Yes. Yeah.
Right? And this is where it's like, the model is profitable, you're just not managing it correctly because you're looking at all the reasons it could play out, and you're not looking at all the reasons it could not play out.
Yes.
Suddenly this area of support over here, and we can rub this out, it's like you're playing that reversal. This area of support where price really did this before going higher, you're trading it here, and then this is 50% of this range, this low, and then suddenly price picks back up, and you're like, well, that shouldn't play out. Well, actually, this area of support is just a basic support and resistance, and you could have been out of this trade net zero. But a lot of people don't do that, and they're like, oh, it didn't...
getting married to the bias.
It didn't play out, it's wrong, the model doesn't work, etc., etc. So the pros of this, though, are you can catch high of the day, high / low of the day.
Yeah.
and you can really catch a monster trade if managed correctly. It is highly profitable but again, it comes back into this point. It's only profitable when the break-evens are managed correctly, and you are trading that. The pros are the higher time frame alignment, and you can manage that. You can really get into this trade on a very low time frame. Time frame.
Would you class this strategy and what we've gone over as sort of rule-based as well?
Yeah, there are definitely rules to the strategy.
So like how much would you say is in terms of mechanical versus discretion in this?
I think a robot could pick up the model, and with the right, if I sat down and wrote the logic out correctly, it could be quite mechanical. The reality is that I think the discretion is my edge. Like that is just part of it, right? And everybody that like I've ever taught or will ever teach, the first thing I say to them is, "This is going to really suck because I can't teach my intuition." And part of my edge is my intuition. But I can teach you the model and help you learn the intuition over time. But the only way you can do that is through the reps.
Right? Reps is most important.
The reps.
One thing I will ask, in terms of this model, is it purely, obviously you're trading it on NQ, but have you had traders or anyone that you know who's taken that model and used it elsewhere as well?
I traded a Bitcoin short from 100K to literally to 80K for this exact.
So you could say, I don't know if the right term is fractal, but it is something that can be applied elsewhere as well.
Multi-asset, because ultimately, like I said, I subscribe to market maker theory. The market just across the board, from a liquidity standpoint, means that price should always be offered at fair value, which means it should be distributed into 50% of the range.
Yes.
And ultimately, that doesn't mean that price can't just suddenly go 50% of the range. It could just trade all the way to very close to the new low and then redeliver into 50% of the range.
We've seen this,
right? And we've seen that, like Euro USD, for example. It trades, it sits in this range forever, breaks out. Everyone's thinking it's going to the range low, and then it just returns to the range EQ.
Yeah.
And it's like, okay, what do? You just not sit in that trade and wait for the EQ? Okay, you probably look for a fractal range inside of there that you then look to trade. So the pros for me, right, are you can manage the trade, the trade on it's basically multiple time frame because it's fractal. You can get into a low time frame trade. There's a con to that is that it's more risky.
Yeah.
You can get into a higher time frame trade. They're higher probability, but again, they're wider, so they're more swing trades, right? You can't trade them on more futures assets. It's more like low leverage products that you would look to trade. So it's multiple time frame. So it suits both traders. Some traders I get come to me and go, Kane, I got a real job. I don't, I can't be at the market all time every day. Well, the model works on a higher time frame. I took a Bitcoin short based on literally the daily chart. I didn't look at anything else, just the daily chart. And I took that and it ran minus 20%,
So if you necessarily can't be active during that time window because of the fractal nature of it, it's still not a problem.
Yeah.
You just take that viewpoint higher.
Yeah.
And therefore able to swing trade / position trade.
Correct. Yeah. Ultimately, like I said, I subscribe to market maker theory. I really believe that the market just delivers into 50% of ranges and re-delivers into a 50% of another range. And sometimes that won't hold and it will just go lower. And it's a higher time frame range all the way on the left, right? I built a model around just grabbing that 50% to 50%. And that's all I need. And if I do that on a lower time frame, I can look for a trade most days. Not every day is a trading day, of course, just like everybody. But I can look for that trade most days. And if it's managed correctly, I will most likely get at minimum a break-even trade or some sort of profit. And if price is very, I'm grabbing that reversal based on that confirmation and price just reruns the high, it will be a loss. But statistically over time, it's profitable. And that's, you only get that from doing the reps, like we said.
Yeah, no, I love that. And in terms of off the back of that, what would you look for entry-wise? Is that a confirmation-based entry that you look for? Or?
Yeah, so I look for, because I'm trading the indices are very, they're very well aligned. So if ES, let's just use ES for red, ES is red, NQ is green. If NQ does this, right, ES should also do this. Right, they may not look completely like in terms of this one's a bit lower, but they took the same low. Yeah. For me, this is a well delivered market. Okay. Right, I don't like this. I look for the divergences between the two because it shows relative weakness on a single asset. Right.
Okay.
So we can go. I can actually show you an example about this. I can show you the exact example, and we'll draw the entire chart. Is the NQ rallied again? This is 9 a.m. This is 10.
Yeah.
And then trades lower. trades higher, and then does this, and then
Okay.
trades into around 50% of that range.
Okay.
But at this specific point, ES does this.
Okay.
So ES runs this existing high.
So then that happening, that divergence is then telling you the weakness on NQ is much stronger than ES at that time.
Yeah. So I care more about this chart from a volume perspective
yeah.
because this chart has the most volume. It's the most traded asset in the world other than bonds, right? So if this is going to just do this, it can do that, and this could just do this as well, right? It's getting very very crowded.
I love it.
So it could just do that. My invalidation for this is that. Why? Because this shouldn't then go on to break this high.
Yeah.
This should continue below here.
Okay.
Right? And this is what I'm looking for. Again, 50% of this around there.
Yeah.
Right? I'm looking for that. And then I'm looking for a breakdown in and around this area.
Okay.
More so this area because it's the wick on the hourly time frame. Yeah? I want to be positioned in this wick. Well, obviously this doesn't look like that, but you get the point. Right? I want to be positioned in here in any capacity. So with that in mind, I more or less just look for an imbalance in here that has impulsed higher, right? And then I want to look for an entry once this SMT divergence, again, call it what you want, it's just a cracking correlation, trades below this level, I will either limit a retap into this area, or I'll sell stop this with my invalidation here, targeting 50% of this.
Yes.
There are other things that I use to have higher time frame targets, or actually we're most likely to trade into the low. But the basis of what I teach is this, right? Because you, like I keep saying, you only need this move from here to here. You don't need from here to here.
Yeah.
You don't need that. And most of the time, this is just emotion hoping this plays out. You know, it doesn't have the logic of it continuing higher. And like I said, we'll keep saying it. Everybody will look at why it wants to play out over here and not look at this as the reason why it won't play out. So ultimately, just to confirm, right? Divergence, a weakness in market structure.
Yeah.
In this example, it's an inversion.
Yep.
And an inversion is just a previous gap that should be used as support, gets
Failed.
traded below
And uses resistance.
and used as resistance.
Beautiful.
Yeah.
Yeah.
And then just this is basically everything. Higher time frame premium discount. That H4 PO3. So higher time frame PO3.
Yeah.
So in this instance, it would be the daily plus the H4.
Yeah.
Yeah. And then at that point, my trade would be entry at inversion. Oh, my handwriting's awful.
No, it's great.
At inversion. And then my stop loss. Oh, that was awful. At divergence.
Yeah.
Oh, yeah. At divergence. And then my TP is just
50%.
50%.
Love that. Would you say one, maybe not a con, but something to be aware of? Do you think it takes certain adjustments for some people if they haven't been maybe utilizing the fractal nature of the markets and that higher time frame sort of viewpoint? So, for example, in this case, the PO3 from daily 4 hour, obviously still looking at PO3, for the H1.
Yep.
Do you feel like sometimes people have to get used to being able to see the market in that way by still keeping in mind the daily when they're on the H1, for example, and the 4 hour?
Yeah, I always advise people to if you had to tell me right now where you want to see price manipulate into on the daily chart, where would that be? Mark it out. Just create a little box. Now do the H4, now do the H1, and now just create a box where they all align and figure out that that's where you want to see it manipulate. You need logic for doing that. The logic for me is the range, right? That range. And it's understanding there are some other confluences, like I say, that I use to say, okay, we might trade a little bit further than the 50% of the range. It might be 60%, it might be 58%. I don't look at it in that way. It's just 50%, 0, 100. Once you're above 50, I'm looking at that breakdown from there because that's where I'm looking at that. And then I fractalize that from okay, well, if the H4 candle frames in here, I want to see a push above the previous H4 candle. And that H4 candle has 4 1-hour candles. So I want to wait for that push above and that breakdown. So then you're trading the H1 PO3 inside of a H4 PO3 inside of a daily PO3. And if you combine them, you can get much larger targets. Why? Because the daily PO3 should technically, if that's the high of the day, it should technically go to the low. But for most people, this is enough. If you want to swing trade and do all of that, you have to really, really understand the PO3 fractality very well.
Do you feel like the best way to start is to start with the base hit? Over time, build that confidence with that base hit, get the results with that base hit. As you're doing so, you will start to pick up on more of that higher time frame. You'll start to pick up on when does price actually play out for the higher time frame over time. But what a lot of people unfortunately do is just try and focus on this straight away before they've even got the base hit down.
Look, I'm a big believer in base hits, right? Base hits have made me millions of dollars in the market. And like I say, if managed correctly, you can really avoid a lot of silly losses and get break-even days, maybe a little bit positive days, which for a lot of people still hits your daily requirement for most prop firms for payouts, et cetera, et cetera. Everyone would like to trade the high and the low of the candle. If you could do that, you would be a trillionaire, right? So the reality is you can't do that. And you may catch it once in a blue moon or once a month or twice a week. I don't know. Or not twice a week, twice a month. You know, twice a week, you're probably still a billionaire. You may be able to do that. But over time, if you consistently look for that, you'll take a lot of losers. So it's better to have a set of rules that say, this is where I want to see price trade to. And if price is really, moving, or, hey, the volume is insane here, hey, trail your stop loss, move your TP target to the extreme and aggressively trail that stop loss. And who knows, you might get 20, 30% more profit. But don't be upset that it didn't hit the extreme because it's still past your POI that you should be out at. Yeah. And that's your line in the sand. We go there for any reason you're out. You want to see it really fall through. Again, to quote Pax, you want to be right or right out. Yeah. So, but yeah, this is what I look for. And then, like I say, you fractalize this and say this is the, this is the daily open. You just imagine that the H4 opens the same way. You want to see the exact same thing. The hourly opens the same way. You want to see the exact same thing, trading above that previous hour, that previous day, that previous 4-hour candle. Because when they all align and it's the 4-hour wick inside of a daily wick inside of an hourly wick, when that next hourly candle opens, bang, it will just fly. So yeah.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Tradezella. Tradezella is the #1 trading tool in the entire trading industry. Tradezella allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a Forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to Tradezella, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with Tradezella and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto Tradezella, so you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now you can actually get 10% off your monthly subscription using CF10 on Tradezella right now. But more importantly, I would say CF20 for 20% off your yearly subscription with Tradezella. The links for Tradezella are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode. Love that. Well, let's take a look at the charts now. Now that we've done all the visuals and explainer, I'm sure people are excited for that. So.
We're in the chart now. When I approach the chart, I will go on the daily time frame, like we just discussed, that daily fractal PO3. I will mark out the current high, the current low. I will see that since trading into this low, we failed to trade into 50% of this existing range.
Yeah.
And then from a much higher time frame perspective, sorry, this is the high.
Yeah.
There is no, leave it. We are currently in a much higher time frame, 50%.
Mm-hmm.
Yep. So right now, typically, I am looking for some sort of reversal from here up to here.
Okay.
Right. So now we taking it off the whiteboard onto the chart.
Yeah.
Overall, I'm waiting for some sort of reversal characteristic on a daily time frame to then have my bias that we're looking to trade up into that area. Right. Let's take these drawings off. So then we just drop down to the H4. Right. And we'll go over a trade example from yesterday. Right. So if I just replay this to yesterday, so Thursday 10 a.m. we'll do it from Thursday. This is Wednesday, so we can just leave it on Wednesday, right? Wednesday 2 o'clock. I would then go to that 4 hour, and then I would mark out this high. This made a high. So if we were to mark out all of the 4 hours from the drop, right?
Yeah.
This was how it happened. We failed to distribute into EQ. We then make a new low. So this then just becomes this. We failed to distribute into EQ, so this becomes a new low. So you can see that we've built up an engineered liquidity around that resting EQ now. Yeah. So this is the overall 4 hour range, that daily range. Sorry. Yeah. So then from that 4 hour perspective, when we make a new low, when we consistently do this and we just make a high, make a low, make a high, make a low, what it's delivering in is to 50% of this.
Yes.
Yeah. So if we just go ahead and mark those out, right? So from this, we just put the magnet back on. If we deliver from here to here, you'll notice 50%, some sort of higher time frame sweep. That 4 hour PO3 is in here. Yeah.
You can see that with the 4 hour candles next to it. Sort of the range, then the wick, and then obviously the manipulation, the distribution.
If we just drag this to this side, everything we just discussed is in here. That 4 hour, that high, that low, 50% of the range, 4 hour PO3. And then if we fractalize that again, H1, I want to trade in here. I want to look. I have an indicator that automatically prints S&T. So
there's your divergence.
There's my divergence. So at that point, I'm looking to trade this. This is on Monday actually. So again,
before you've even got that.
And I've just jumped to that just from drawing this premium discount range. And it's not even the trade we're going to show, right? So again, here we failed to distribute into it? Yep, because we made a new low, right? So here, Tuesday, right? Again, 50%. Now what are we looking for? If we fractalize that premium discount, right? From here to here, 50%, we trade into it. That H4 wick, that PO3, again, we'll just get to the Thursday bit, but I'm just showing you how I mark out premium discounts, right? So Thursday, this is Thursday at 10. Okay. So we have previous day low. Yep.
Yeah.
So this is, sorry, not previous day low. This is previous day low. And this is previous day low from Wednesday, right? So ultimately, from this drop to here, right? That's the current when I'm approaching the chart on Thursday at 2 o'clock. At 2 o'clock, I would then go to a lower time frame. This little grey box is just marking out the Asian range. It's the most lowest probability conditions. I just mark it out as when we sweep one of these areas, typically we reverse from it. Everyone should be familiar with the Asian range. If not, you can Google it. It's very, very, very well documented about what it is, right? So
this is a similar concept in terms of like building up a range, liquidity either side.
Building up the range, sweep, reverse. Yeah. And typically this doesn't sweep it today, but it reverses, right? Yeah. What happens is we end up sweeping that divergence
Yep.
at 2 o'clock, which is what the 2 a.m. EST, which is when I consider a London Open.
Yep.
ES sweeps that because of this little red line that prints. It sweeps it and then it reverses. So this is a good example of accumulation, manipulation, distribution to the downside, right? I'm not trading this because it's low probability conditions for me, right? So where is price most likely going to end up based on this and this? We can also just mark out, because we would also mark out the hourly. I can tell you that this is the hourly range. So if we mark out this low, right, I refer to this as the logical liquidity target, which is basically, if we're marking a premium discount range, it's the first high or low in that 50% drop, right? So I want to see price trade into that area. Once we hit that area, overall, I'm waiting for price to show a characteristic for us to reverse. And ultimately, what I'm looking for is I'm looking for that characteristic to form, right? Do we get something? What's the time? Let's just mark this out. Again, this will just consistently move until we hit that 50% of that range, right? Do we get it? Do we get it? No, we just keep going lower, right? Again, some people would draw it from here, the premium discount from here to here, but because ES actually took the high here, in my head, this high right here is the high.
Okay.
Yeah? So I don't care that this is the high, or I don't care about this one. I care about this is because this at 2 o'clock
That's where you use
swept that
divergence.
liquidity, where I use that divergence, because in my head, from a logical perspective, I'm treating this as that this liquidity has been swept and we should not return there.
Okay.
So that is the new dealing range, premium discount range that I want to see, right? So we've traded way into discount, right? Or premium if you're, well, it's discount because it's 50% lower, right? And then what I'm waiting for is we front ran previous day low.
Yeah.
All right. So to me, this is just engineered liquidity.
Yeah.
We're now inside of
Premium,
right? We've got that 10 a.m., right? So if we mark out the previous 9 a.m. high, which is right here, that's our hourly PO3. So right now, this is the area that I want to see price manipulate into and trade away, but we're skipping something. So what is that? That is the daily. Did we take a previous day high? No, I'm still expecting to trade into some sort of low, right? And then if we go on to the 4 hour, and again, it's probably just going to skip forward, but we mark out that previous 4 hour high. And then if we go back to the hourly, that previous 4 hour high is resting just around the EQ, right? And then what I would do is I would say, okay, we've hit that hourly high at 10 a.m., right? Now what I want to see is I want to see price break down. This is the hourly PO3, what I'm looking for, right?
Yeah.
Hourly PO3 that is aligning with the H4 PO3.
Yeah.
Yeah. This is at 10. So right now we also have our eye on 10 a.m. high. So as we approach into that 11 o'clock area, so this is 10:30. So we can just keep moving this. There's no confirmation breakdown right now, right? Okay, we trade lower. The H4 PO3 is looking good. But in 5 minutes time, because I'm looking at the bottom of my screen right now, down here, in 5 minutes time, this candle is 10:55. In 5 minutes time, if I look at this, do I want to see a reversal from here, or do I want to see this high taken? Most of the time I want to see this high taken.
Okay.
But I would wait for some sort of confirmation here, right? So I would wait. I would typically drop to a lower time frame at this point once this SMT prints, because it will show you a dotted line because it's saying the ES is trading above this high.
Okay.
We have dual SMT, or dual divergence, which means there's divergence at the lows and divergence at the high, which means the range is getting tighter. And now what I would look for is this inversion that either to hold, or us to take the high, follow through, and then trade back through this inversion, and my trade would look like this, right? So at this point,
is where you would have a sell stop.
So at this point, I would be anticipating, and again, this is due to my intuition, is I'd be anticipating that this high would hold, right? Again, SMT at the low to here this would be my logical liquidity target. And again, a lot of people are going to not really like this, but this trade isn't the sexiest of trades, right? Again, this is what I would look for right now. This is what my sell stop would look like, right? Anticipating that if we reverse from here, this will confirm the divergence between these two, right? What happens? I'm in this trade now, and at that point, this will now be my stop loss, right? And then price will, you get a chance to enter because price trades, and we can just zoom in, price trades closes below the inversion right here. You get to enter here and you get to enter here, right? So this is, right now, we are entering inside of that 4-hour wick, right? Because this is the previous 4-hour high and we're still in that 4-hour candle. We don't get a new 4-hour candle until 2 o'clock, right? So we're entering inside of that 4-hour wick. And also, you have to remember, where did 11 o'clock open up? Right here. We are also entering inside of that hourly wick. Right? So the H4, previous 4-hour high, and the new hourly candle opened. This as of right now is the area that I would want to go break even, right? Because this hourly candle just flipped bearish.
And that's just really showcasing the aggressiveness of that.
Correct.
Break even.
Yeah. I mean, this is not even this is just ran 1R. It's just purely coincidental that it's 1R. I don't care that it's 1R. I just care that this hourly candle was flip bearish, sorry. It's hard to show that with TradingView replay mode. So it's a bit difficult, right? So, but if you envisage that, let's just drag this out of the way. The 11 a.m. candle opened here. And this is where it opened. And now this is what the candle looks like. This is the wick. This is the body, right? So this would be my trade. And I would be out, right? And ultimately, I get out of this low. I can tell you what happened. Trump tweeted about tariffs, tariffs pausing, right? But if you miss this trade for any reason, would you enter here now? No, because it hit discount, and ultimately, we're anticipating the high. The reality is, I closed my trade right here. I don't care about this. Because if I, for whatever reason, was break even here and I was aiming for this low, I would have got stopped out and then the move went against me. So I would have missed out on, okay, a monstrous move. But I still caught 381 ticks on one contract. That's quite a lot of money, right? 381 times 5, I'm bad at maths. We know that, right? It's a lot of money, right? I'm trading more than one contract. That is enough for a good amount of time. And again, we can show you my Tradezella in a minute for the trade that I took there and how much that looks like, right? So ultimately, and that is the trade from Thursday. So fits that 4-hour hourly PO3, trading it back to discount, and I'm done. This trade runs, like really, really runs. Like, you know, I could have stayed in this pretty much all day until the close. You know, it closes all the way over here. All I need is this tiny little move in the market, waiting and waiting. I could have tried to long the bottom here. I could have shorted once we just trade above this high, no confirmation, and this could have ran all the way up here, just like it ran all the way down here before trading higher. Right? I don't like to enter around the open as much as possible. I entered twice this weekend. I took 2 losers around the open. So on this specific day, I avoided this move. And also, there's no confirmation. This is, if you could rate it out of 10, this is a 12 plus. This is a 12 setup. It's the best ever. SMT, 4-hour high, trading above, into discount, with that inversion, straight into discount. And if you really wanted to get back in, you could. I would never, ever advise anyone to do it, especially after something driven like Trump tweeting about tariffs. It could have just gone sky high. You know, we got a monstrous run over here because of some tariff tweet, and it was just like,
the thing is, by doing the base hits over and over, for the time that you do then feel the intuition, you feel the market's in the right place, and you decide to hold, you've already banked a buffer to be able to do that.
Exactly. You know, once you've done the reps enough time, it's like, hey, I actually know that this is, or I have a gut feeling it's going to play out. I've made a bunch of money. I can take a bit more of a risk. That is purely intuition. It's not anything of like, okay, there's some confirmational factors there, but it's betting on your draw more often than not. This is purely just the model. The low,
plus, as you said, that's more than enough to make a good income. And it might not be where you start. You might start with micros. You might start with a smaller capital, but it's through focusing on the process and focusing on the strategy and sticking to it and getting those basics in. That's the only way to scale, right? You have to start somewhere and build up that repetitions, and then that's the only way really to scale. Let's take a break for a minute there, guys, because I want to tell you about our incredible partnership with PropFirmTrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage your trading skills to be able to get more capital and to be able to absolutely change your life. So what's important to you? To be able to find the right challenge for you with the best firms and, most of all, the best prices. And that is exactly what PropFirmTrader.com does. PropFirmTrader.com allows you to compare prop firms, be able to find the best challenge suited to your trading style, and get you the exclusive best discounts in the entire industry so that you're paying the cheapest price possible for your prop firm challenge. So on PropFirmTrader.com, you'll be able to use filters to be able to do that and find the exact challenge for you, be able to find your favorite prop firms. On the futures side, we have the biggest futures firm in the entire industry with Apex Trader Funding, giving us the best discount possible. Right now, it's actually 80% off using the code PFT. On the CFD side, on Forex side, we actually have a broker-backed prop firm called Atmos Funded, backed by Torex, and they are giving an exclusive offer at 50% off all challenges. Again, using the code PFT. So make sure you go do that. And not only that, another exclusive offer only on Prop Firm Trader is with Bright Funded. Bright Funded are giving up to 30% off all challenges and a free account of the same size on your first payout. And on top of that, you can get an exclusive offer only on PropFirmTrader.com with Alpha Capital on their one-step challenge, 25% off using PFT1. So make sure you go and do that. And there's so many more exclusive discounts only on PropFirmTrader.com. It is the go-to site for all prop firm traders out there. And one thing I'm really excited about that I personally helped to organize was the giveaway of giveaways, the 7-figure giveaway, just through purchasing your challenges for the best price through PropFirmTrader.com. Every single week, you will automatically be entered into an incredible giveaway, a collaborative effort across all of these firms on screen, between 100 to 200K accounts, over 7 figures. It means that one person every single week who's made a purchase through PropFirmTrader.com will be getting 7 figures in challenges that could completely revolutionize your trading journey. Again, all you do is for any of the firms on PropFirmTrader.com, use the code PFT at checkout, and you will automatically be entered every single week. The link for PropFirmTrader.com is in the description below. Now let's get back to the episode.
Yeah, but even if you took this with one micro, it's $200. You know,
Exactly.
it's not
In a day, right?
in a day. Like
Not even
that's
in a day, if you want to class the actual
sure.
time.
Let's just say it's a day, right? Because it's you waited around, you were patient, you did all those things.
Yeah.
You made $200. Like, where can you make $200 by clicking a button and being a bit patient and practicing all of those things? It's really hard to just get that out of nowhere. So a lot of people go and work a very manual labor job for 12 hours a day, 10 hours, 9 hours a day, whatever, to make that money. We do it, and okay, fine. We may have some losers occasionally on the days, but over time, you're gonna make more than $190 over time because you take one trade, you take two trades, that scales and scales and scales, and then suddenly you're making, you know, daily wages in minutes and weekly wages in hours. You know, so, and then also, so this is obviously around the open. So I'm just gonna remove all my drawings again. So that was that trade, and then on Monday I actually took a long. No, I didn't actually. That's a lie. Okay, so we get a drop at Monday at 9:30. We get a drop, and then we get that push up into discount here, right? Again, we just did the daily and the 4-hour, the fractality, but this is the 9:30 drop, big build up throughout Asia. We have a big drop here.
This is really showing that Asia side now where we've taken the high, and then we could target the low as well.
Took the high, target the low. Yeah. So if we just mark out this to here.
Yeah. So aiming for that 50%.
50%, pull back into 50% to then trade lower.
And then the Asia's low sits above that 50% as well.
Exactly, yeah. So, again, I'm just gonna, we obviously know how that plays out because so again, right? So a lot of people could just take this inversion right here, right? Like I said, 50% that breakdown. What we're really missing is the key piece sometimes is that divergence, right? So if we break this down, H4, trade above the high. This is the H4 PO3. The daily PO3 looks like this. We're trading above that daily high, yeah? We're trading above that 4-hour resting high, yeah? And if we go to that hourly, it happened at 9:30. We manipulated higher and then traded lower. Again, I know some people that caught this trade from a very low time frame perspective where, you know, they sell stop like this inversion with this being some sort of SMT, and they sell stop it and they get into it and it falls off. We can't catch those every day, and I didn't personally catch it, right? So based on this 5 minute, I'm waiting for that SMT to form.
Yes.
Right? And it's at 3 minute, right? Waiting for it to form. And as soon as we close back below with that SMT, yeah, all I'm looking for is the first low inside of that discount. I wouldn't necessarily include this. This trade is definitely not the sexiest of trades. It's 1.26, right? But it happens more or less straight away. This was actually the one that I got stopped on. And then I re-entered over here because we get that confirmation of SMT. And that happens sometimes, right? And based on that, it is just the laws of probabilities, right? I would always just leave this because it's such a low risk to reward trade. I would always just wait it out. And then with the second trade, I would sell stop this same area because my bias doesn't change. The only way that this changes is if we continue higher, right? And I would always take two.
You got SMT then off the back of that as well.
Yeah, because this was SMT. Yeah. And then this went on to create SMT again, right? Yes. With NQ taking the high and ES failing, right? And then I would just sell stop this. This trade at this point, because of my risk to reward and I got stopped, I would aim for a larger target, but more or less, because it's on the 3 minute, as soon as we take out the 15-minute low, I would just be break even. Okay. Right? So as soon as we take this low on this, I'm now break even. My risk is nothing. I'm not risking anything. If I now get stopped break even on the day, my risk to reward is nothing. And that was that. And that was it. And I walked away with the loser on the day. You know, not every day can be a winner. And we can go from there. That is the trade. And then again in the PM session, and we'll come on to it. Again in the PM session, I joined a stream with one of my friends, a guy that I trade with sometimes in terms of I check in on his content. He does a PM session every single day. And then later on at like 2 o'clock with that H4PO3 again, we took another short and I literally finished just above break even on the day on Monday. Okay. Actually, no, it was that's a lie. It was quite a big day. That's a lie. That's a straight up lie. But we can go into the Tradezella report. There are quite a bit of break even trades in there, and we can show that. And there are also some losers, right? But the number one thing is that I always wanted to highlight by coming here and having this is that if we just respect 50% of the ranges and the ranges are marked out correctly, we can really, really, really manage our risk. You know, I would always take this trade with this SMT. We don't trade into 50%, or we trade into 50% here, but because of that, this is the first low in discount. I would never, ever go break even on this trade because it's bad RR. And I would just accept my risk. And then I would always know that I will get another shot at it, or I'll be wrong and I'll walk away. You know? So
I love that. It's great to highlight as well.
Yeah.
And just before we move on to the Tradezella bit, could I just ask, in terms, remember that Bitcoin daily chart? Could we just see the PO3 on the daily?
Okay, so the Bitcoin, it's actually already on my chart, right? So,
okay, beautiful. So
this is just a very higher time frame. It's funny because I actually tweeted at Casper about, he was like, give me a fair value gap, please make it work. So I actually had that on. So you can see, this is I can just come out of replay mode so we know that it's up to date. So here, I used the divergence for ETH, right? So this is actually just a weekly PO3. I'm trying to trade that weekly wick, right? I don't get an entry in here, in this wick. And then what I'm looking for is that daily imbalance with that SMT to be traded through, right?
Nice, yes.
And then basically what happens is we trade through it.
It's the fractal nature.
I'm short, right? And just for everybody, there's a tweet all the way over here. The day I got short, bear market confirmed, it's over losers. Be happy happens, be sad you bought more, right?
Yeah.
And that's obviously timestamped, I can't move that. That's literally the day that I got short on that. And that is that SMT, we can get rid of this because we didn't go over that. It's that daily imbalance. And then I'm looking for that 50% of that range. This is a weekly imbalance, right? So I wanted a good reaction out of here. Again, this trade took a while, right? It's a more of a swing trade.
Yeah, it did take a while.
Yeah,
consolidated for a while there.
This trade took, nearly a month to play out. I was in it for a while, paid quite a bit in fees as well, because at some point the funding switched. So, ultimately it took a while, but it's my model to a T. That divergence, you could have tighter risk. I don't really need that because I'm happy with this risk to reward. I'm happy with 2.25.
How are you in terms of going from like really speedy scalp trades to then holding this sort of trade? Is it more? Was it anything, or was it more so because you know the model?
Yeah,
you've got all those reps. You just let the model play out.
It's a mixture of things, right? I love to trade NQ on a higher time frame. Yeah, the margin requirements to do that are silly. So like the leveraged opportunities to day trade and intraday trade indices, and specifically in my case NQ, are really beneficial, right? So I have to get in and I have to frame those lower time frame trades because I have to get in and out of the market within the same day, or I have to have millions of dollars in the account to fund a margin requirement to hold that. With this, I don't need that. I can trade this all day, every day because the market is open all of the time, and the margin requirements are the same no matter what time or day. So I would like to swing trade NQ a bit more. I don't because I want to, if I'm going to trade a regulated asset, I want to trade it on a regulated broker.
Yes, of course.
With crypto, it's a bit more risky,
Of course,
as we know. And as people will know, I've been burnt with this a few times. But this was like almost too good to pass up on. We dropped so heavily and then bought back. And it's just like, okay, well, maybe we go to the high. My risk is my risk, and it is what it is. And,
was there a part where you went break even here or adjust the stop?
I actually never moved this trade. I just left it. And because it was just like I didn't even look at it. It was like I would check up on it every couple of days. Oh, we're up this much, we're up that much. Oh, I could move a break even. But it's just like, especially the last couple of weeks. Yeah. The Trump tweets, the crypto tweets,
It's hard to keep up.
Yeah, it's hard to keep up. Like we drop and then suddenly they announce American crypto reserve and it pumps 10%. It's like, at that point I was already out of the trade. Yes, but ultimately I was really wanting to see this. And people will ask me, do you think Bitcoin is a good buy right here? I don't know, because there's a lot to go after, right? But all I know is right here, this was the area that I want to see NQ trade into. Up here, create that SMT, that stalling, that floating sideways action, a drop, and then if we continue higher, great. If we don't, great.
Did you mean Bitcoin? You said NQ.
Sorry, I meant Bitcoin. Yeah,
too much NQ.
Too much NQ. Yeah,
but that divergence, this case, you said was ETH, right?
With ETH, yeah, nice. Yeah, with Ethereum. But Ethereum's very weak, right? So it's again like this divergence at the bottom here, and there was divergences along here, which I knew and accepted that my bias was lower overall with indices and just in general the market.
Yes, yeah.
And we've seen over the recent weeks the market has heavily corrected. So
yeah, well let's finish up with the Tradezella stats.
Yeah, we'll show you the overall stats on Tradezella. Okay, so this is the Tradezella dashboard. We'll just resync it so there's no reason. As you can see here that it's a NinjaTrader account. The balance shows here as 26,988. And if we go to the dashboard, you'll see that the P&L is 26,988. It was a 25K deposit. For those that don't know, I recently announced a partnership and a basically a live trading program with Ninja. So Ninja are my broker of choice, I guess now. And normally I deposited 25K, and Tradezella have the auto sync feature, so we can just sync all of the trades, and then it will just show the statistics. So over the period of the week, relatively low trading volume because obviously these count as in and out. And as you can see, my win rate is 50%, 50%, 85, 83. right? And this is just this week. There was obviously last week as well. It's just a very low week. It was trying to ramp that up. But as you can see, the volatility from the week commencing 2nd of March, volatility is crazy at the moment. VIX is crazy, crazy high. And these are my statistics, right? The average win-loss because of that break-even rate. And I don't mess with right now my Tradezella settings are if it's a minus, it's classed as a loss.
Okay.
So some of those break-even trades that I get wicked out on due to volatility do count as losses, and that's just how it is. But overall, max drawdown consistency, winning rate. My winning rate, it says trade winning percentage here. Obviously, I haven't had a losing day, but that's just because my break-even percentages is so high, and that is why my average win-loss is so low. And then net daily P&L, we obviously had that spike on Monday, as I was speaking about in the PM session, where price really ran. But overall, it was just trying to get that nice equity curve, spiking, I guess, to some degree here, spiked with that 8K day. And then the rest of the days are around that 5K, 2K. Again, this was
like using those base hits to build up the capital, and then over time it will start to exponentially grow, as well as when you get those larger trades that you use their intuition and have the base hits for. Exactly.
This trade, like I said, like I explained earlier in the video, sometimes when price really, really moving quite heavy, you can just trail that and trail that aggressive stop loss, and that was what happened there. We trailed it once it hit around that 10K mark, that 10K floating P&L. I trailed it to just under 9. And then literally as soon as it just reverse wigged me out and continued a little bit. And it is what it is. I didn't need to get back into that move or have FOMO, because based on the account performance, 8K on, one day on a 25K account, it's crazy, right? And it's purely down to volatility. It's not down to anything else. It's just I'm in the trade at the right time, and price really starts to move quite heavy, and the volume just picks up, and I just trail. But the reality is I could have got out of that trade at 3K, at 2K, at 1K. But it's purely my intuition that allows me to go, this is really moving. It's not slowing down. So,
because even though showcasing the model as you have today, how important do you feel it is for traders, whether it's your model or any model that they're learning from someone or come across? How important is it for them to collect the data to be able to have the confidence in it?
I've said this loads, right? It's all about the reps. It's having the confidence that the model is profitable over a period of time. It doesn't need to play out every day. And sometimes you may take a loser for back-to-back. Like my live streams the last couple of days, I've taken a loser both times. And then, later on in the day, I've looked at the market and gone, oh, my model's about to appear. Or I've set alerts and my model has appeared and I've clicked the button. And that's just how it is. That's just, the devil of the beast, right? So, but the average person will probably stick around on the chart a lot more and take those silly little trades because they're like the daily, the H4, or they'll be like, oh, we're trading into that daily POI, and then they'll be trading a very low time frame confirmation. It's like, but that could just pull back and continue. You haven't got the layers to that. You need that confirmation of that daily. It's above your area on a daily. It's above your daily your area on a H1, and doing all of that consistently over years of data. Couple of times, 3-4 times should take you a while. And once you do that, in that repetition, you'll spot it. You'll be like, oh, I've skipped a step. I took a loser there. I can't skip that step. Those steps are there for a reason. And the logic of getting in and out at 50% of the relative ranges is because the market is if it's going to continue, it's going to continue from there. And if it's going to continue without it, it's a loser. Congratulations. It is what it is. It's part of the game. So putting those reps in is, for me, is the most important thing. And that, is why I personally use Tradezella. And, I know you guys obviously work with them, but the journaling stuff inside of Tradezella allows you to journal your bad trades. The backtesting stuff, they're one of the best futures backtesting. And obviously the automatic journaling for me is the creme de la creme. I like to just, I guess, show off my statistics or showcase my statistics.
We love it. They're great stats.
But yeah, they're good stats. But who knows? Tuesday, because I don't really trade Mondays and Fridays, on Tuesday, I could have a loser and these statistics look worse.
Of course.
Right? This is a great run so far, and it's no period of data to be, I'm an amazing trader because I got 6, 7, 8 winning days back to back. Great. I could have 4 losers next week. But overall, I'm okay with that as long as over a period of 3, 4, 5, 6 months, the model is profitable, and I don't care about losing short term. It just is what it is. So,
well, Kane, I want to thank you again for breaking this all down for us. I know that there's so much value and there's so much for people to take away. And drop a comment with your biggest takeaway from this first initial Chart Fanatics episode. So this is our first of many to come, and no better way than having Kane with us today. The links for Kane and the lab will be in the description, so make sure you go check those out. Hit subscribe, and until next time, everyone, it's been Chart Fanatics. Take care.